Bitcoin wins out regardless of what happens, but the absolute certainty is that cannot stop accelerating debt issuance. At some point, the Federal Reserve will backstop that with printed dollars. That too will accelerate. The snake will eat its tail. And all along the way, Bitcoin will be the sponge that absorbs all of that new money and that best tracks that money creation. So yeah, that's kind of the long-winded way of saying buy Bitcoin.
Today, I'm excited to welcome Joe Consorti to the podcast. Joe is founding member of Horizon, head of growth at Thea Self-Custody Bitcoin, and host of Joe Consorti on YouTube. Welcome to the Bitcoin Edge, Joe.
Thank you so much for having me on, Paula. Excited to talk.
Yeah, I'm really enjoying your channel on YouTube. You have wonderful information, and we'll get to a little bit of that. But before we get there, tell us a little bit about yourself and what led you to Bitcoin.
Of course. So, I'll go all the way back to high school, but I promise I'll be quick. I had a general interest in Bitcoin, or not Bitcoin, rather business. I helped run some of the business clubs over there, but I went into medicine. That's what I wanted to do in school. As I was sitting in my dorm room during orientation, I had a bit of an epiphany and decided to switch into business. It was something I was already doing, and plus 12 years of residency didn't sound that great to me. I really wanted to get started in a career right away that wouldn't require me to be in, $250,000 of debt. And so, I took to business. In the business school, I met a few Bitcoiners, now very prominent in the space, both of them. It's very interesting going to college in the Northeast. At a state school, you wouldn't expect to kind of find people who are that interested in Bitcoin. But they got me into it. And throughout that exact same time, I was researching and studying global markets and macroeconomics on my own time. The school had provided all students with free access to Bloomberg terminals in the library. So I took advantage of that. My routine was basically go to class, go to the gym, eat dinner, go to the library, and use the Bloomberg terminal and really teach myself how to do it. And so that's what I did for the first, 5-6 months that I was at school. And then in March of 2020, this was my freshman year, over spring break, I took an overnight bag. And in the middle of spring break, March 13th, 2020, they said the semester is over. Nobody can come back to the dorms because of COVID. And so that really made me quite angry, right? I had paid for the entire year, and it made me quite mad that one entity could have that kind of power. And so it pushed me down into the direction of Bitcoin sooner, right? That summer, I had run a small general contracting business at home because I figured, if I'm going to be home for the summer and the remainder of the spring, I may as well hire some of my friends and go do some contracting work. And that's what I spent my summer doing, earning, a great deal of money for someone who is 18 years old while doing it. And then at the end of the summer, I read two pieces about Bitcoin, one being The Masters and Slaves of Money by Robert Breedlove and The Bullish Case for Bitcoin by Vijay Boyapati. Both of those really increased my conviction by several orders of magnitude. I decided to go all in late 2020. And then early 2022, I left school early to go work with Nick Bhatti and build out his publication, The Bitcoin Layer. At the time, it was just him. He hired on me and one other gentleman, Matt Ball, to build this company. And then, I've been there for, a little over 3 years now, actually. I'm more in the background now and behind the scenes. And then in 2023, late 2023, early 2024, I was picked up by the team at Thea, which had just been funded by Y Combinator and Hashed Emergent and General Catalyst, and they had just launched the V1 of this self-custody app, this collaborative custody solution. And so I started working with them as the head of growth, which continued kind of I continued doing my research that I was doing over at the Bitcoin Layer, but also instructional videos and more podcasts and things of that sort, and generally just, growing my own personal presence on Twitter and also the company's. And then more recently, with the Thea co-founding team, they created, I suppose we all created a company called Horizon, which lets people swap home equity into Bitcoin without monthly payments or interest charges or debt, which is a pretty unique solution. It's kind of a first of its kind when it comes to Bitcoin. There are other sort of deferred interest loan products, but nothing that allows people to do this fully on the equity side without taking on debt. And so it's a very, very interesting time that we're in right now. But that's how I got from there to here. Essentially, it was, this series of circumstances. None of this was planned whatsoever, and I just wound up here.
Wow, that's a pretty amazing journey. No altcoin journey in there?
No, none whatsoever. I'm very thankful to have gone to school with a couple of very ardent Bitcoiners, and thankfully, they had a sniffer for this other kind of stuff. And very early on, I was hearing, all of this other stuff is garbage. And so I took their advice. I saw it in real time in 2021 and 2022, and I figured I'd made the right call.
Wow. Well, you are an unusual young man and entrepreneur. You had that bite right from the beginning.
Yeah. Oh, certainly. Yeah, that was one of the big things that drove me into business. Right. It's either I wanted to go and be a pediatrician because when I was a kid, I had so many surgeries for my ears. I was basically near deaf. My hearing still isn't all that great. Thankfully, I don't need hearing aids, but my hearing wasn't all that great. And so the people I spent the most time around were doctors. And so I saw doctors and I said, well, I guess I'll be a doctor. But then thankfully, through my experiences, I found that I had much more of a, sweet tooth per se, for business, right? Whether that's, it kind of began in high school and then it morphed into during my college years of studying capital markets and learning about the way that things work, and kind of starting out as a research analyst, then moving into, a full blown researcher. And now, basically talking about the greatest trade of all, which is, speculatively attacking the dollar, by by aping into Bitcoin and shorting the dollar.
Yeah. Well, I can tell you have a really good grasp on that by listening to your videos. And you recently did one about, we all know Bitcoin recently hit all-time highs,
Mhm.
and which is exciting in the Bitcoin space. But you also mentioned it was with low volatility. Tell
Mhm.
us why this is significant.
Yeah, this is quite significant. So if you go back in time, when you go to, let's say, 2017, for example, the top in 2017, which, that cycle went from $3,000 all the way up to $20,000 by December of that year, right? It was really crazy. At the time, I wasn't in Bitcoin, but obviously being a student of markets, you go back and you learn about what happened. So in 2017, we saw this kind of behavior, and it was coincided with a massive spike in 30-day realized volatility, right? Um, and then it crashed, right? So every single major cycle top that we've seen has always coincided with a spike in volatility. As Bitcoin has grown larger, that spike has fallen. It's diminished a little bit, but all told, every single cycle top throughout all of Bitcoin's history has coincided with a spike in volatility. Same thing with every cycle bottom, right? But to this point, Bitcoin's volatility, its 30-day realized volatility, is actually quite muted, even at $123,000 as of just a few days ago. And so, what that suggests to me is that Bitcoin is nowhere near done with this cycle just yet. And that's, I'm very grateful to have been mentored by Nick Bhatia, obviously professor at USC, author of Layered Money and Bitcoin Age, and obviously, founder of the Bitcoin Layer. And he worked on a rates desk for several years. And so his entire MO, his ethos when it comes to markets is that Bitcoin is just one asset that exists in a universe of other assets. Some of the most important things to understand when it comes to studying Bitcoin and learning about it and figuring out the way that it operates. Number one is the U.S. Treasury market, right? What are rates doing? Because rates, they're the underlying asset for everything, right? They're the benchmark rate for the entire global economy, and they impact risk asset pricing, right? And so that was one of the first things that I began studying very, very, very closely. That's core to my markets ethos as well. The second thing is cross asset correlations and things like volatility, which is what we're observing here. And so really reading the tape and trying to figure out what Bitcoin has done behaviorally, so we can extrapolate that into the future and figure out what it's doing now and what it might do is really the entire point of markets research. It's not throwing out price predictions. It's merely taking a look at the setup essentially in markets, right? Whether it's Bitcoin's correlation to other assets and things like volatility, things like volume, things like liquidation leverage, all those things, and putting it all together to try to get some directional sense of where Bitcoin may head. And always thinking probabilistically, right? So never speaking in absolutes, but always being hedged, always being probabilistic, and assigning probabilities to the directionality of markets. That's what it means to be a researcher, right? Not price prediction. So I went off on a bit of a tangent, but I wanted to explain kind of why I think these things are important. But all told, Bitcoin's volatility is very similar to what it generally is at the beginning or middle of these bull markets. It's certainly not volatility that would suggest the cycle top is it.
So, working on probabilities, what is the probability that we get as high as 200,000?
Of course. So there are a couple of different factors to consider. One of which being the macro environment right now. So currently we're getting relatively mixed, if not pretty good, economic data. And what we're seeing is that the 10-year yield, the 2-year yield, those are climbing, right? So expectations for growth in the United States are up. Expectations for the federal funds rate is up, right? So expectations for the direction of the Fed's policy rate is higher. And so essentially the market is, they're not pricing out rate cuts, but they're pushing back the probability of rate cuts into further out in the future. And what that means for risk assets, obviously a great global economy, that's good for risk assets because that means people are spending. If the Fed was primed to cut in response to poor economic data, or let's say CPI inflation that is coming down, then that would mean in the near term, not great for risk, but in the long term, very good. When the market is anticipating rate cuts, risk assets tend to do very well. It's all about the Fed reaction function, meaning how is the Fed going to react to incoming economic data? And right now, essentially, because economic data is kind of coming in as expected, if not a little bit better than expected, then the Fed reaction function is to take the path of least resistance, which is staying put. In staying put, at the margin, you wouldn't think that that's amazing for risk assets because generally it isn't. They love rate cuts more. But what we're not seeing is a tremendous, this great economy. We're not seeing a tremendous tightening in credit creation per se. Credit creation, right, measured partly by liquidity, right? Liquidity takes into account the price of treasuries, the yield on treasuries, as well as treasury volatility, in order to try to figure out whether credit creation will be ample or scarce. And generally, we're not in a very tight situation where credit creation is going to be very scarce. And knowing that the economy is this global credit engine, that lends money to existence and can only run if money is being lent into existence constantly. If liquidity is in decline, right? If liquidity is in decline, then that's bad for risk assets. But liquidity is actually in expansion, despite rates being this high. And so essentially, the Fed, even though a lot of people are clamoring for rate cuts, the White House included, they seem to have found, for the time being, the neutral rate, right? The R star. That may be lower at some point in the future, right? Who knows if the market can stomach these kind of rates for a pretty long time. Generally speaking, they haven't been able to. The market, rather, the economy, can stomach these kind of rates for a much longer. Generally speaking, they haven't been able to. If you look at, years past 2015 all the way through 2019, we had this trend of rate hikes, and then something happened in the repo market in 2019. Rates had to come down. But we'll certainly play it by ear. We'll see what happens. For the time being, liquidity is ample, credit creation is chugging along, and so risk assets are doing well. That's what's in the horizon. And so we bring all of that to the question, which is, what are the probabilities of Bitcoin hitting 200K? I'll point to two things. One of them being Bitcoin's correlation to gold. So Bitcoin lags gold by about 50 to 100 days, right? Give or take. And so Bitcoin back in April was $85,000. And I tweeted something out and I highlighted it again yesterday, that should Bitcoin continue following its loose directional correlation with gold, within 100 days, 120K is certainly, in play. And it happened. It actually happened in 90 days from when I posted that tweet. And so, or excuse me, 93 days from when I posted that tweet. It came, essentially 1 week early. And so, should Bitcoin continue following essentially what gold is doing? And more importantly, should Bitcoin continue following what the dollar is doing? The dollar is in a secular trend of weakening. Then, $200,000 by year end potentially is certainly not out of the question. It's just a function of how economic data continues to unfold and whether or not something happens in the broader global economy that is not expected, that would force the Fed or drive the Fed to cut rates sooner by a larger amount. In which case, you'd probably see a near-term kind of shocked reaction from Bitcoin and a medium to long-term appreciation in Bitcoin. And so it's really all about the probabilities. It's all about the economic data. And it's all about what the Fed is going to do because of how correlated Bitcoin still is to this big bucket of risk assets globally. Very long answer, but that's what people should be looking out for.
Yeah. And that's why people don't make price predictions, right? Because you always have to be, like we say, on your toes because you don't know exactly what's going to happen with the Fed. I've heard rumors that Jerome Powell would maybe be asked to step down or quit. But from my research into Bitcoin, And, the creature from Jekyll Island says that the Fed pretty much runs the show. What do you think about that?
Yeah, the Fed does run the show, but I'll add another asterisk to that. The Fed runs the show, but rates lead the Fed, and rates are determined. And when I say rates, I mean U.S. Treasury yields. Those are determined by the broader market and investor behavior. If the broader market believes that rates should be lower than they are currently, what they're going to do is they're going to buy up. Let's take the 2 year, for example, the 2 year at 4.5 or 5%. They're going to buy up the 2 year at 4.5 or 5% if they think the economy is in such rough shape that rates actually need to be 100 basis points lower, let's say in 6 months, 12 months, 18 months. And so then rates come down, right? Because, obviously the inverse relationship between price and yields in fixed income instruments. And then the Fed sees that and they're forced to react in kind. Rates very much lead the Fed in the sense that even though the Fed runs the show, right, they're determining the benchmark rates, the economy does have some input on that as well. Or the economy, rather, investors writ large have a lot of input in that as well, globally, because U.S. Treasuries, are the single largest, most liquid fixed income market, the largest market of just one asset in the world. And so they're huge, they're highly liquid, they're used as collateral everywhere, they're held by just about every major global player in global trade. And so they really do lead the Fed. And so that's why it's so important to keep an eye on economic data and try to understand what rates are going to do in response to it. The second thing I'll say is that Trump really wants the Fed to not be independent. And frankly, I don't either. I don't want the Fed to exist in and of itself. But you mentioned the creature from Jekyll Island. The Fed is a wholly independent entity from the U.S. government. And so really, essentially what's happening now, I don't believe Jerome Powell is going to step down. But what is at play here is essentially, if you look deeper, and this is a little bit conspiratorial, but there's some logic behind it. What Trump is trying to do is he's trying to make it so that Jerome Powell is essentially guilt tripped or forced via, this kind of public flogging, Marty Bent called it, in order to step down, in order to resign, right? Kind of shame him into resigning and say that he's doing something wrong or what have you. And the idea behind that is so Trump can essentially institute somebody who is completely 100% on his team. During 2017 through 2021, it was Trump's first term as a president. So he didn't really know all about Washington. He didn't have too many close friends in Washington. And as a result, a lot of the people that he ended up appointing, disappointed him. Now he is a much more tighter cabinet. And the one appointee that he still has yet to kind of change from the old guard into the new guard, from the people he didn't necessarily know but were vetted by other people for him to take on, compared to today's cabinet, which is independently vetted by Trump, is Jerome Powell. But the problem is with Jerome Powell, you can't fire the guy, right? It's independent from the U.S. government, and so Trump is taking this other tact, which is create these rumors. Post on Truth Social that he's doing a terrible job, speak at press conferences that he should resign, with the hopes of him resigning. So then Trump can take somebody that he has vetted independently, that he knows will enact the Trump agenda, which is just, rate cuts, rate cuts, rate cuts, regardless of how good the economy is doing, and regardless of whether or not that would spur on inflation, and put them in his Fed chair. So that's essentially what's happening right now. Trump is trying to push Jerome Powell to resign because he doesn't have the power to fire him himself. And in doing so, institute somebody who is much more in line with the Trump agenda, which is essentially just rate cuts, regardless of whether or not that's good or bad for the economy and inflation.
Yeah, very good points. So just to end on our all-time highs and the Bitcoin price, do you have a guess at where Bitcoin goes in this cycle?
Yeah, so I'll bring it back to probabilities. I mean, if you think in the near term, I think it's pretty reasonable for Bitcoin to kind of take a pit stop here at like 130 to $135,000. That may very well be the cycle top. There may be some grand change in the way the economy is functioning over the next couple of months that prevents it from reaching heights like $180,000 or $190,000 before the end of the year. But if things keep chugging along the way that they're going, right? The economy is doing just fine. There isn't any imminent need for rates to be slashed or even brought down, like these maintenance cuts of 25 or 50 basis points. Then I think there is some kind of probability. I think 30 or 40% that Bitcoin goes all the way to 180 or 190 before year's end. As far as the cycle, who knows? But I think looking out 5 months, I think I'm pretty confident in saying, there is a probably 60% chance that we reach 135. And then 40, and then we may stay there. And there's a 40% chance that we move higher than that. We go to 180 or 190 before year end.
So, and then you're saying the 4 year cycle does continue at least for now.
I mean, the 4 year cycle is it's something that has been a part of Bitcoin for a very long time. Two things we have to look at. One of them being the halving, which of course occurs every roughly 4 years, not exactly every 4 years. And then the other being the cohorts of buyers in Bitcoin. In cycles past, it's been entirely retail. It's been entirely retail investors in one way or another. And really, only this cycle has that turned from retail investors to full blown institutional allocators who are not just allocating to spot Bitcoin via the spot Bitcoin ETFs, but they're also allocating to Bitcoin by buying these leveraged Bitcoin vehicles like Strife, which is a preferred stock. So that's good for fixed income investors, right? Buying a perpetual preferred, or strategies, convertible bonds for equity investors to buy. Or people just buying leveraged Bitcoin exposure through Bitcoin treasury companies, right? So now, like every corner of the market, aside from real estate, which is what Horizon is aiming to change, has access to buying these vehicles. And so the cohorts that are purchasing Bitcoin are much different. And the primary people who are purchasing these ETFs through BlackRock, through Fidelity, right, they have a much longer time horizon than your typical retail investor, right? A lot of retail investors, right, when you talk about smaller size, a lot of that liquidity in cycles prior is largely come from people who want to buy a lottery ticket, especially on the way up, right? People are trying to buy a lottery ticket, they're trying to gamble, and they're going to sell at some point. Versus long-term holders, right? There have always been long-term retail Bitcoin holders, but certainly with the introduction of institutions purchasing Bitcoin through these vehicles like BlackRock's IBIT and Fidelity's FBTC, now the institutional makeup, the buying makeup of Bitcoin has a much longer time horizon. You have pensions, you have endowments, and others who have much longer time horizons than typical retail investors. And so, what I'll say is that um, it remains to be seen, right? This will be a great test for Bitcoin. Whether it'll continue moving through, the rest of 2025 and then make a bottom in 2026 and then begin moving higher after that, right? Really, who knows? It's all on the table. We don't know if this change in Bitcoin's buyer cohorts will make a change to its typical 4 year cycle. We will just have to wait and see. And I think that's one of the things that's so fun.
It certainly is. You and I were talking, people in the Bitcoin space are all excited about Bitcoin and its future, but it's been pretty quiet in the rest of the world. And you also mentioned that Bitcoin recently passed Amazon to become the fifth largest asset in the world. Most people don't even know that. Do you see it passing Apple in the cycle? And where do you see this going?
Yeah, so I think I'll actually pull up the numbers currently for myself. Bitcoin, when it crossed 120, it was kind of nice because it passed Amazon to become the fifth largest asset in the world. It's now back down in typical Bitcoin fashion because its
Yeah.
current price is, 119K. But it's still, $7 billion away from Amazon, right? So it's probably going to end this cycle larger than Amazon. Apple is $3.133 trillion, which would imply a Bitcoin price of around 200K in order to pass it, right? If not a little bit over 200K. And so in my mind, it's frankly, it's all up in the air. Whether or not Bitcoin will be able to surpass Apple through the end of this cycle. We will have to wait and see. We'll have to wait and see. It's all based on the probabilities that I mentioned earlier. There is some chance that Bitcoin goes to 135 and stays there. But in my mind, every single day, I'm increased, or my confidence increases in this notion of Bitcoin going all the way to 180 or 190. Um, Apple might be in play for this cycle. I tend to lean away from that idea, but again, we'll have to wait and see. It's really exciting. And of course, I'll be talking about these things as they develop. So,
And it's a matter of time, right?
yeah,
Because as global M2 continues to increase, which it will, because we're on a debt based cycle, eventually Bitcoin will overtake those others.
absolutely. Yeah, no, we live in a world where it's absolutely necessary for credit creation to expand and not just expand, accelerate, right? We have, I think the debt ceiling was raised by $5 trillion, something around or over 40 or $41 trillion. We're at 36 or $37 trillion in debt now, and so the guy who's in office right now, a lot of the things that he had promised, a lot of them are happening, right? But some of them, chief among them, spending cuts, have not happened. And that's not necessarily Trump's fault, right? You look at the way that the United States works, these spending cuts have to go through Congress. And frankly, a lot of congressional members, even Republicans, right? Even it's and I'll say this one thing about U.S. politics for one moment. Um, Republicans, even when they have power, right, even when they have the majority in the House and the majority in the Senate, they somehow still manage to shoot themselves in the foot. It really is incredible because Trump was elected with a mandate to do several things, right? One of them being spending cuts. He hired Elon Musk. Elon brought on the best and brightest that he could find, young guns right out of college and high school, to find these areas of the government where there was waste. Elon found them. They presented them, they put them in bill form, they put them forth through the House and the Senate, and they don't pass, right? And so, really, it's truly a remarkable thing what's happening here. Like, we've found the waste, we've identified some of the biggest, most egregious areas of waste that are just a no brainer to do away with, and somehow, even with a majority Republican House and Senate, we still can't do it. And so, it's very frustrating, but at the individual level, it's very telling because that means spending cuts will never happen. If you have a president who previously was, this is the second president in history who's serving his second non-consecutive term. That tells you that people really love this guy, right? Even though he eked it in once more, he won the popular vote, which he didn't win last time, and he won more electoral college votes, which he, than last time. And so, really, it's a mandate from the majority of the American people to do these things, and our leaders still can't do it, right? And so, with a more polarized country than ever, you're never going to get a stronger mandate than you did in, October, November of 2024 for things like spending cuts, and you just didn't see it, right? So, in my mind, this is a problem that's never going to be fixed. We're just going to continue borrowing more and more and more and more after year, and revenues just simply aren't going to keep up in the United States. And the difference will be made by the Fed monetizing the U.S. Treasury market, right? The Fed coming in and buying more and more and more of U.S. Treasuries. Currently, they do purchase U.S. Treasuries, but not at auction. They purchase them directly after the auction. They purchase a set amount that's already determined in advance. And so currently, the narrative that the Fed is stepping in to buy U.S. Treasuries because there's a shortfall of foreign buyers, it's not true. There's still plenty of foreign demand for U.S. Treasuries. In fact, foreign holdings as a percentage of total holdings have increased over the last 5 years. But that's not to say that will last forever. Ultimately, in my mind, the way that this ends is a snake eating its own tail, right? The Fed and U.S. Treasury being separate entities, right? Ultimately, it's the Fed's obligation to make sure the U.S. Treasury doesn't go bankrupt, right? Full employment, stable prices, that dual mandate aside, it has an obligation, if it has this money printer, to make the U.S. Treasury does not go bankrupt. And so the difference will be printed when it needs to, whether it's in times of crisis or it's in times of, kind of this fiscal shortfall. And as a result of it, because spending will never be cut because of the reason that I just mentioned, Bitcoin really is the only safeguard against that. And what Global M2 really shows is a chart of basically dollar weakness, right? It's the entire global pool of fiat in the world, right? Most of the major sovereign countries denominated in US dollars. And so it's showing two things. It can be rising for two reasons, right? One is that the global pool of fiat is expanding, or two, the denominator, the US dollar, is weakening. In the case right now, it's more of the latter than the former, right? So a lot of the rising in global M2 we're seeing right now is simply a weakening of the US dollar on a relative basis. And so that's why global M2 is rising. But the beautiful thing is that Bitcoin was designed to hedge against both of those things. It's an absolutely scarce, politically neutral monetary asset that anybody can own and is highly liquid and is 24/7, 365. And so, being the perfect asset to hedge against it, it's really no wonder why Bitcoin follows this global M2 metric, right? This thing that tracks the absolute pool of fiat money in the world, roughly speaking, denominated in US dollars, tracking dollar weakness, because that's what Bitcoin was designed to do. And so long as those two things continue to occur, right, the dollar weakening at the margin or the global pool of fiat expanding, Bitcoin will continue to rise. And for the reasons that I just mentioned, those two things will continue happening. In conclusion, Bitcoin will never stop rising. So it's like the bell curve meme, right? There are more complicated ways of explaining this. Up here on the left is Bitcoin's going up forever. On the right, Bitcoin's going up forever. The simple fact is that Bitcoin is just going up forever.
And that's wonderful for people who get Bitcoin, but it's actually hard on the rest of the world because it means they just continuing to debase the currency and people will continue to struggle. When do you think more people will realize this?
Yeah. So, I mean, I used to take the tact that people will realize this once it's at their front door. But I think in the West, things need to get a lot worse in order for the majority of folks here to realize it. Um, you look at things, and I won't go into detail, but people in the West have shown a specific inability to change their opinion on things, even when those bad things are at their doorstep. So, what I'll say is that, around the world, people understand Bitcoin for a very different reason, not as a savings technology, but as money, right? As the only property that they can have. Talking about the third world. And so that's what's driving Bitcoin adoption over there. What will drive Bitcoin adoption over here, stateside, is less that and more so, continued debasement of the currency, right? In 5 years from now, when eggs are $5 a carton and they never go down, and then 5 years after that, when eggs are $8 a carton and they never go down, then 10 years after that, when eggs are $16 a carton and they never go down, that's when people over that period are going to become to realize what Bitcoin is, right? At that point, 15, 20 years from now, ideally Bitcoin is a 1, 2, or 3 trillion, $3 million asset. I don't mean million in the sense of market cap. I mean, the price of the base unit. If Bitcoin was a $3 million asset by market cap in 10 years, we'd have a problem. Ideally at that point, Bitcoin is much larger because people just over time will come to it on their own terms, right? It'll be a much harder and much slower because there are a lot of stubborn people who think they know exactly what they're doing and exactly what they're talking about. But I tend to believe it'll be a combination of those things and also more on ramps, right? More on ramps into Bitcoin that are easier because people have a great deal of unit bias. And so they look at a Bitcoin that's $120,000, like, whoa, that's way too expensive, right? That's, how big my mortgage is, right? I can't do that. And so there's a lot of misunderstanding about what Bitcoin is and a severe lack of on ramps. Um, for institutional allocators, MicroStrategy has created these beautiful vehicles in equity and fixed income markets that allow investors to get synthetic exposure to Bitcoin. But the biggest asset that most people own is real estate. And not to segue into this just yet, but the notion is that, like, okay, there's $370 trillion of real estate globally. Over 10% of that is in the US. And most people are not using that because there exists very few, if any, solutions to use that. And so a lot of people are getting FOMO, right? Whether you're a homeowner and you're seeing Bitcoin rise and you're saying, man, I wish I didn't buy this house, or you're staving off homeownership because you can't afford it and you'd rather buy Bitcoin. It's created this situation where houses are no longer homes, are no longer just places to live. So I think what brings people there is that realization, and then what helps them there is these on ramps, right? Like what we're building at Horizon. Um, anyway, right? That's kind of how I see things unfolding, slow and steady. Because if it's anything else, if it's a 0 to 1 event that drives the entire world to go into Bitcoin, and Bitcoin to be $1 million tomorrow, something terrible happened, and chances are not a lot of us are alive anymore. So it's going to be a slow, gradual process, and I think one of the biggest players in that will be these brand new on ramps that are coming onto the scene and helping people go from one asset into the other being Bitcoin, seamlessly and efficiently.
Yeah, I love that explanation. And that was the perfect segue. The very next question was about this 370 trillion global market of real estate. And it sounds like you have really low time preference. Patience, you're building this on-ramp for people to come in. And Horizon aims to be the bridge between home equity and Bitcoin, allowing people to use their equity without selling their house or taking on new debt, payments, or term limits, you said. As you know, I am in real estate, so I'd love to hear how this works.
Yeah, absolutely. So essentially, the way that Horizon works is it lets homeowners swap their dormant home equity into Bitcoin without new debt, monthly payments, interest charges, or term limits. And the way that it works is quite simple. So it's called a home equity investment. It's a tool that's existed for quite some time. Generally, people use it for things like home improvement. But with an asset like Bitcoin, it's a really, really neat tool because more often than not, homeowners, right, they still have mortgage payments, right? They still have a mortgage balance. And so tools like a HELOC or another type of, home equity backed line loan, it precludes a lot of homeowners from doing that because it means another monthly payment in addition to their mortgage, in addition to potentially a higher interest rate that they're going to be paying on that relative to their home. Not only because of where rates are now, but also because what they're going to be doing with the money, right? What you're doing with the money tends to impact the rate that you can get on a HELOC or a HE loan. And so if you're saying, I want to take 150 grand out of my property to buy Bitcoin, chances are you're going to get a 10% rate or an 8.5% rate, right? Something I've seen. And so for most homeowners, it's just out of the picture unless they want to severely adjust their lifestyle. Where Horizon comes into play and where this HEI model comes into play is that, and specifically the way that we've done it with our preferred partners, our financing partners, is that essentially, let's say you have $1 million home, you swap $100,000 of that, if you qualify, into tax-free cash, right? And then you can go and use those proceeds to buy Bitcoin. You can buy it with us or anywhere else. And then in exchange, our financing partners acquire a commensurate stake in the property. That stake gradually increases over time until year 8. And then beyond that, the only increase in the contract payoff is just the rate of inflation on the home. And so the contract payoff is just that stake that you swapped out initially, right? You took out $100,000 in tax-free cash. In exchange, our provider took out a 10% stake in the property that gradually grows over time, caps out at year 8. And then the contract payoff is just that stake, paying that stake down in cash. And so given that home, appreciation rates are like 3%, Bitcoin appreciation is, it's at 30% over 4 years now. It's this compound annual growth rate. The lowest it's ever been is around 20 to 24. And so you're looking at a pretty wide spread there. And so this offers an option for homeowners who aren't just looking for flexibility, right? They don't want to enter into some kind of fixed term debt instrument where not only will they have those monthly payments and interest charges, but they'll also be capped out at 10 years, right? That's not always ideal. What if Bitcoin crashes exactly 10 years from now, right? The flexibility there won't be great because the idea of many people will probably be, okay, I'll sell a portion of my Bitcoin to pay down this loan. But what if Bitcoin crashes? Term limits are not great in that case. And so what Horizon allows for is we don't have term limits, right? Whether you sell your house earlier than expected and need to close out the contract, or whether you're staying in your property for longer than you expected, or you just want to weather a Bitcoin crash and wait till it recovers and hits a new all-time high before you close up the contract. It really gives you that flexibility, all right, to basically take this massive pool, what ostensibly big pool of dormant capital, and flip it into an asset that, historically, based on U.S. home average growth rate, has grown much better, right? Currently, 10 times the growth rate of the average, of the Case-Shiller home price index, which is 3 years, 3% annually. Bitcoin being at 30%, right? And so essentially we've done this in such a way that it doesn't come with a lot of the drawbacks of traditional loans, right? Because Horizon is not a loan, it's not a debt product, it's an equity product. So people can get into Bitcoin today without fear of disrupting their lifestyle for however long they plan on doing this for. And so, it's a really innovative product. And ultimately, we envision this as being one of the go-to options for homeowners in the United States. Not only is homes continue to be people's largest assets, because with mortgage rates where they are, with home prices where they are, chances are when younger people get into homes, they won't have any other disposable income to put into things like investments. So the idea is that, over time, people choose Horizon to basically mobilize that home equity while they're still living in the house. But also, me personally, over a long enough time horizon, I just think real estate is the next big pool of capital that is yet to come into Bitcoin. And Horizon has constructed this direct funnel from one into the other, right? We want to siphon first the $35.1 trillion of home equity in the United States. And then broadly, we want to capture the entire monetary premium that exists globally, right? Which is, anywhere from 150 to 210 trillion dollars. That difference between the utility value of real estate and the monetary value of real estate. All of that over time, I believe, will be siphoned into Bitcoin. And basically, we're trying to build a first of its kind on ramp for that to happen here in the United States.
Yeah, that's incredible. It's my understanding that it's already slowly starting to happen. I've had guests on like Leon Wankum,
Yeah.
and he talks about how real estate investments are starting to come into Bitcoin. It's so slow that we don't notice it. But how long do you think it's going to take for the utility cost of a house to come down to its correct level?
Yeah. So I think it's a multi-decade process. Um, We're talking about a global asset market that is so vast and so dispersed, and so distributed. It's a very very convoluted market. It's not very cut and dry. Something like the global bond market, or something like the global fixed income market. These are real, physical, tangible things, right? Not just promissory notes. And so, whether you're talking about suburban neighborhoods or the inner city, whether you're talking about residential or commercial, or just land, or completely unzoned federal land, like there are a lot of different, very varied types of real estate we're talking about globally, right? All of which has a monetary value attached to it. Um, and so this is going to be a multi-decade process. Companies like Horizon are really targeted at the residential real estate market. Companies like Battery Finance are targeting the commercial real estate market. But over time, you're going to see a lot more of these companies popping up. And as a result, these vehicles are going to become even better options for homeowners because with competition, it becomes a race to the bottom, right? It becomes a race to the bottom in terms of price. And so ultimately, that's what you're going to see. You're going to see a lot more of these options. These options are going to become better and better over time. And the players who come in now at this stage and do it right and create product market fit and become a first mover and get that advantage, they're going to be the companies that are here for years and decades to come. And so I think it's a multi-decade process. There's still several areas of the market that have yet to be touched, and Horizon is doing its part in making sure that the residential area is taken care of.
And then you as a Bitcoiner also, do you recommend Bitcoin in self custody?
Oh, of course. Yeah, I mean, but self custody is much different for everyone, right? Like when people think self custody, they think of a hardware device that grandma can't use. Um, I believe in self custody wholeheartedly, but that looks different for a lot of people. Some people may be comfortable doing it on their own, and some people may need some kind of collaborator, right? Someone holding their hand. And so there are plenty of solutions out there. Um, and this kind of goes into what we've built at Thea, right? Which is this really great collaborative custody solution that, regardless of where you're at, on the Bitcoin spectrum, whether you're a seasoned expert who is used to using your Sparrow wallet to manage a cold card, or whether you're a brand new individual who just bought their first Bitcoin on river.com, or Coinbase or Swan or wherever, and you have no experience with hardware devices whatsoever, we built Thea to really cater to both crowds. And to this point, it's worked to a tremendous degree, and we're very, very happy with where we're at. And yeah, no, I 100% wholeheartedly believe in self custody, but not at the expense of simplicity, right? Because people need to understand how these things work, and not forget how to take how to gain access to their keys that they put on their cold card 5 years ago. So it's a really tough line to straddle, but I believe we're actively solving for that. If not, we've already solved for that with Thea.
Yeah, I think that's correct. There's different solutions for everybody. So Thea is a multi-sig type device. It has the option.
Correct. Yes. So Thea is a Bitcoin platform. It's a Bitcoin custody platform, but it's also we've gone far beyond custody, and it's really people's all-in-one Bitcoin operating system. You can call it, right? Just like you use Windows or Mac OS for your computer, you use Thea for your Bitcoin, right? That's essentially the way that how the platform is morphed. And so essentially, right? Let's go through a few examples, right? If you're an individual who wants to custody your Bitcoin, you have hardware wallet experience, and you want to do a multi-sig. You can come to Thea, right? And essentially, the utility of a multi-sig. The best way to think of this, I'll throw away the term multi-sig, and I'll just use a three-key vault, a multi-key vault. In the same way that if you go to a bank, let's say you need two keys to open it up, right? Just like in Harry Potter. People call me Harry Potter on Twitter and YouTube all the time, so I'll use a Harry Potter analogy, right? In Harry Potter, let's say you're at the Goblin Bank and you need to use two keys to open up your vault. But there's a backup key that the goblins at the bank hold, just in case you lose one of yours. That's exactly the way that Thea works. It's exactly the way that this multi-key vault works. What's called a 2 of 3 multi-sig, but I'm calling it multi-key. It's exactly the way that multi-sig works. So, let's say you have two keys, you lose one of them. Thea holds that third one for you, just in case. And it's solely for recovery purposes, solely if you lose your own. So it's really beneficial for individuals who may be sitting on a lot or a little Bitcoin that they just don't want to lose, right? You open yourself up to a bunch of attack vectors when you have all your Bitcoin on one device. Many people think that if I back up my seed phrase, which is basically a backup of my key, onto, like whether it's a physical metal seed plate or a piece of paper, and store it somewhere securely, then I'm okay. I've eliminated the single points of failure in my setup. Um, in actuality, you've doubled the single points of failure in your setup, because now people just need to gain access to one of two things in order to fully gain access to your Bitcoin. Whereas with a multi-sig, you are eliminating single points of failure because people need access to two of three things in order to gain access to your funds. They need access to both of your keys, not just either your one thing, either your key or your seed phrase. And so really that's what multi-sig broadly solves for, and what we believe we've solved for to a really great degree over at Thea. Um, in that, let's say that same exact situation, someone compromises one of your keys that's being used in a 2 of 3 Thea setup. If they don't have the other one, your Bitcoin's fine. And then all you do is you go into the Thea app, you report your other key is lost or stolen, you answer your security questions over a 48-hour window. There's a verification process, no KYC. If it is you, the Thea key gets unlocked and you can securely move your Bitcoin elsewhere. It really is nice and simple, and it solves for these things that are a huge problem, right? $5 wrench attacks or just wrench attacks have become much more frequent in that, there are several videos, one most recently of a crypto exchange founder in Paris and his wife or his daughter being attacked in broad daylight on the street. They were, almost dragged into vehicles. And ostensibly, what would have happened is that they would have been strong armed for their Bitcoin. So many instances of not just broad daylight attacks, but people's homes being broken into and their Bitcoin being demanded at gunpoint. Those $5 wrench attacks are suddenly mitigated to a tremendous degree when one key cannot access your Bitcoin on its own, right? When you have one key in one location and then you distribute the other key geographically, whether it's at a friend's house or in a bank security deposit box, wherever it might be, multi-sig helps to solve for and mitigate the risk of total loss of funds in the event of a $5 wrench attack, right? So there are a lot of things that multi-sig is great for. I think, in terms of long-term custody, multi-sig is great. It doesn't have to be self-custodial, right? Thea allows for it to be self-custodial, but you can also work with a financial advisor within Thea to make it so that it's not fully self-custodial. You have someone holding your hand throughout every step of the process. And then, there are solutions where people may just be more comfortable holding their coins on an exchange that has proof of reserves and they have their own proprietary multi-sig infrastructure. And in those cases, I say go for it, right? I never want to push anybody into doing something they are uncomfortable with. At Thea, we have worked to break down all of those barriers with a delightful and intuitive UI and UX experience. But even still, some people just are more familiar with leaving their coins on an exchange. And if that is the case, you are opening yourself up to some risks, but you're still opening yourself up to some risks in self-custody. And so it's all about, at the individual level, weighing the risks, weighing the trade-offs, and figuring out what's best for you.
Do you have a Bitcoin philosophy?
A Bitcoin philosophy. Um, Geez, I would say never sell your Bitcoin. That's certainly my Bitcoin philosophy. Well, you know, and that's something that I've actually had to learn. I sold quite a substantial bit of Bitcoin for an endeavor that didn't turn out to be as profitable as Bitcoin. Just a couple of years ago, and that lesson is more painful by the day as I see Bitcoin climb and climb and climb. Thankfully, I still own Bitcoin. My broader Bitcoin philosophy is that there's Bitcoin, then there's everything else. And the meaning of that, and what I want people to remember when I say that, is that there are always going to be new companies that are launching tokens and telling you that I like Bitcoin, but I built something better for whatever reason. They'll try to sell you on yield. They'll try to sell you on utility. They'll try to sell you on investors, right? They'll try to sell you on, oh, this country bought my token, right? The key thing to remember is that ignore all of the shiny objects. Bitcoin is not a lottery ticket. It is the world's best hedge against a problem that cannot be fixed, and that is perpetual monetary debasement. So what you're holding with Bitcoin is the asset. It's the one savings technology that exists. That's it. There's Bitcoin, then there's everything else. And so what I want people to remember when someone tries to sell you on the next Bitcoin, for whatever reason it might be, however enticing it might be, just remember that they're lying to you. They're telling you this because they want to make money off of you. And they plan on selling all of this at some point in time to buy Bitcoin themselves, right? It's been proven time and again, whether we're talking about 2013 or 2017 or 2022, this happens time and again, and it will happen time in memoriam, right? It will happen till the very end. And so that's what I would encourage people to realize, right? There's Bitcoin, then there's everything else. Everything else is not Bitcoin. There's only one Bitcoin, right? So when you hear the word crypto, right, try to steer clear of it to the best of your ability and understand the difference between these two things, and understand that Bitcoin is the only asset with real utility, because it is the apex hedge against perpetual monetary debasement.
Yeah, that's for sure. How about spend and replace? Because I'm sure you've heard Jeff Booth say that it's really important that we use it as a medium of exchange for it to survive as a store of value. And like you mentioned, in other parts of the world, they are already using it as a medium of exchange. But how about spend and replace?
Right. So, I mentioned I tried the spend and replace thing, and it didn't work out too well for me. Obviously, that's just one anecdote. But, Bitcoin's in a spot where it's only $2 trillion in size. It's not gold, so it's not $22 trillion in size. It's still a relatively tiny market. And so when it comes to spending and replacing it, you really are risking spending some of your Bitcoin. And then if it's a substantial sum and it takes you a while to reaccumulate it, you may be replacing it at a much higher price, and your opportunity cost may be several $1,000s worth of Bitcoin. Um, Speaking from experience, and so what I keep saying that, just trying to ease the pain, right, with comedy, but you know, so that's the issue we run into. Money goes from store of value, which is the current phase that it's in, right, into medium of exchange, right? We've crossed the threshold into store of value. We're well on our way to becoming that. I think the final nail in the coffin, per se, in terms of Bitcoin really consuming the store of value market, will be usurping gold parity. And gold parity comes at this stage at $1 million per BTC. That's when we reach gold parity. If gold stays right where it is, which it won't, right? But then Bitcoin is $1 million per BTC. And so I'll say that one of the big milestones of Bitcoin before it becomes a medium of exchange that people can spend and replace without a huge opportunity cost, is once we usurp gold. The other key thing for Bitcoin to become a medium of exchange is, and why I would discourage spend and replace, is because of capital gains tax, right? That's another key consideration. If we want Bitcoin to become a medium of exchange, then in the United States, right, which is the world's biggest capital market, the world's best country, right? I love this country. I've never been to Europe. I want to go to Europe very badly, but at this point in time, I'm getting married in 44 days, 43 days.
Congratulations.
Thank you very much. Right now, not in the cards to travel to Europe. However, I want to visit one day. But being here and frankly never leaving, I will be biased and say that the United States is the best country on earth. In order for Bitcoin to get from here to there, the U.S. has to set the example of getting rid of capital gains tax. Right? If the U.S. is first mover in this, what it will do to all of these smaller global economies is it will make them do the exact same thing, right? If capital flocks to the United States because it can be spent there, it can be used more efficiently there with less taxation, then that will draw it in. That will cause capital flight from other countries which sorely need it more than the US into the United States. And so that will drive every single country to repeal capital gains tax on Bitcoin. So the single biggest development that is required for us to get from here to there is repealing of capital gains tax on BTC. If that happens, and when that happens, I believe, frankly, then Bitcoin can efficiently become a medium of exchange. At that point, ideally, Bitcoin is large enough in size where it's not making these massive intraday, intra-week, intra-month swings, and people can more reliably spend and replace, right? That is what I believe needs to happen until that becomes something that Bitcoin is, and that is manageable and efficient for people to do with their Bitcoin. For the time being, it is a store of value. For the rest of time, it'll be a store of value. But at some point, it can also become a medium of exchange if and when it's necessary. And that point will only come, in my mind, that point that we will reach escape velocity to becoming a medium of exchange once the capital gains tax is repealed here in the United States. That's my thinking on that sort of development.
Do you invest in other assets?
No, well, it's other non-monetary assets, yes, right? My relationship with God, my marriage, my family. I invest heavily when it comes to my time in those other assets. But my denominator for my life is certainly in BTC, right? When it comes to finances. And that's because it makes all of those things easier to do, right? When people talk about wealth, they're really talking about time. the thing you really want to buy is not, it's not a Porsche, it's not a yacht, it's not a big fancy mansion. Maybe for some people it is, but true wealth is ultimately time, right? It's the freedom to use your time for what you're truly passionate about and what you truly believe can make a difference in this world, right? Whether that's building the business of your dreams, or starting a family and raising them up in the image that you'd like. Um, it's ultimately, it's different for everybody, but the common denominator for all of it is freedom of time, right? And that's what true wealth is. And Bitcoin enables that. And so the other assets that I invest in, non-monetary goods, are these other things. And that's only enabled because of Bitcoin and what Bitcoin allows you to do in terms of freeing up your time. So that's what I'll say there. In terms of other assets, one day, yes, one day a house. That'll be the other asset that I invest in. But for the time being, it's primarily Bitcoin, right? In terms of portfolio composition, there are several other things, but those are for trading. All of which are non-crypto, right? I do not touch crypto. There are other things that I do on the side. Bitcoin treasury companies, chief among them. But in terms of long-term savings, in terms of long-term investment, right? When I think of investment, I think of a long-term savings vehicle. It's solely Bitcoin.
I love that. And you always come right up to my next question, because my next question was, what does freedom mean to you? And I think
Wonderful.
you kind of answered that with having the time to do what you want. Is there anything else?
Absolutely. I would say, what freedom means to me is it truly is the time, because the one commodity that we have on this earth, right? The only other absolutely scarce commodity other than Bitcoin is time. We talk about absolute scarcity. Bitcoin's endurance in terms of units will continue forever, right? There will only be 21 million. Um, but Bitcoin will be around far longer than we are going to be around, right? So at the individual level, freedom means the ability to do with your time what you see fit, and what you are called to be doing, right? And Bitcoin truly does enable that, right? Accumulating Bitcoin and denominating your life in Bitcoin over time means that 5 years from now, 10 years from now, 15 years from now, or sooner, chances are you're going to have that freedom to be able to pursue that, right? And along the way to achieving that freedom, you will be able to invest more time in what you would like to be doing. And so, yeah, I think I stated it very well earlier. But yeah, no, that's what freedom means to me.
Yeah, that's wonderful. And so, with that freedom, do you think Bitcoin could be a spiritual tool? Because now you have the time to look within?
I certainly think so. I mean, I think that a lot of people come to God very differently. I, for one, was raised my entire life. I've been a Christian my entire life, and it's so I certainly come to Bitcoin already having a relationship with God, right? Thank God, right? And I thank my mother for that tremendously. But a lot of people will come from the other direction, right? Whether they were raised Christian, they fell out of it, and they come back to having a relationship with God because of Bitcoin. But I think the underlying reason why I speak about freedom as the ability to use your time as you see fit to do what you deem is valuable in the world, to do what you believe you're called to be doing, is because Bitcoin really changes what you value in life, right? Most of my peers, right, when it comes to college, the things that they are prioritizing are, I want to get my degree, and with my degree, I want to do X, and I'm going to climb the ladder, and by 30, I'm going to do this, and by 40, I'm going to do this, and by 50, I'm going to do this, and by 60, I'm retired. That's what people prioritize. But frankly, that's the skeleton of life that people have been boxed into because of the fiat system, right? By necessity, you must work until you are 65 at a job you may or may not like. It's really a lottery there. And then you retire for several years, and you can finally use that money in whatever time you'd like. You've got time, right? It's 15 years. It's past the prime of your life, but you certainly now have time, and then you pass away. And that's ultimately what most people believe, right? I'll talk about financial nihilism for a second. Most people are kind of jaded toward the world now, and they're jaded toward their prospects because of the money. The money is broken, and as a result, people are more nihilistic than ever. You see this in the rise of sports betting sites, right? Barstool Sports, DraftKings, Bet Online, Bet365, I think it's called Strike, and others, right? Or Stake, rather, not Strike, Stake, and others, right? The rise of these companies is solely attributed to the rise in financial nihilism because of fiat debasement. Things are more out of reach than ever. And so instead of looking within and trying to invest in yourself with the prospect of being able to be a higher earner, getting more marketable skills in order to become a higher earner, and then putting those earnings into something like Bitcoin, uh, that's what's happening on the one end. Those are the financial optimists of the world. The financial nihilists of the world are seeing the situation in front of them and saying, well, I'm going to go down and buy a lottery ticket. Right. And there are a million variations of a lottery ticket, whether it's putting a parlay on your favorite NFL team, or whether it's going down and buying a physical lottery ticket, or betting on horses, or betting on crypto. Right. What's the next thing that's going to blow up? Right. Um, the other side of that's financial nihilism. The other side of the coin is financial optimism, right? Which is, I'm going to operate solely based on faith that the Lord will take care of me and He has a plan for me. And each and every day, I'm just going to try to pursue what He has in store for me to the best of my ability, right? And in doing so, you build these marketable skills, you become a higher earner, and you save those earnings in Bitcoin, right? There are two sides of the coin: the financial nihilist and the financial optimist. And wherever you are, I would say, wherever you are in your faith journey, right? Whether you grew up having a relationship with God, or whether you still don't, but you may be finding one through Bitcoin. Um, Ultimately recognize that you were put on this earth to do something, right? There is a plan that is in place for you, and it's up to you to find that plan. And people are given a choice between financial nihilism and saying the world is out to get me. I'm just going to go buy lottery tickets and drink and gamble and play video games and what have you. But on this other side of the coin, you can be eternally grateful for everything that you have, that you're listening to this, which means you have 2 ears to hear. Chances are you have 2 eyes to see, you have 2 hands to work, and you have a brain to think. And so you've been given wonderful opportunities ahead of you. It's solely up to you to figure out what those are. And Bitcoin really allows people to prioritize that and to store their earnings in that as well, so they can be effective stewards of themselves and their family and the world around them. So yes, to answer the question in a very roundabout way, Bitcoin certainly enables people to do that much more comfortably than ever before. It offers a solution to that financial nihilism, and it allows people to be more in relationship with the things that truly matter in life.
Yeah, that's a wonderful message. And Bitcoin certainly gave me hope when I was starting to lose it. So, yeah,
Amen.
I really like that. And I'm going to post links to all of your companies and where people can find you. Is there anything you'd like to add?
Um, no, I think that stack sats, be humble. That's an inverse of the phrase, but Paul, it was great talking to you. Thank you so much. And, I think we really covered a lot. Chief among them is that, whatever happens in this grand scheme of will Jay Powell get fired, or this or that or the other thing, it's really helpful, I always say, to zoom out, go to 30,000 feet and take a look at what's happening. The incentive structure in the United States is such that we can never cut expenses. It's just the reality, right? The way that Congress is set up, the House and the Senate, we can never cut expenses, because as long as there are no term limits in Congress, what that means is that cutting expenses means that your constituents will never vote for you again. And if this is people's job, they don't care about you. They want to keep their job, right? So spending will never be cut, even when we have a brand new department that comes in with the smartest man in the world, a literal rocket scientist, to find the waste and cut it. It's never getting cut. And so if that's the situation we're in now, and it's a situation we'll always be in, then the best thing you can do is, at an individual level, is identify the asset that will insulate you from the fallout of perpetual fiat debasement. That asset is Bitcoin. It was created for that sole purpose. It's proven its ability to do that time and again, and it will continue to prove its ability to do that as this fiscal situation deteriorates and the monetary situation deteriorates as well. So yeah, that would be my parting message, right? Bitcoin wins out regardless of what happens, but the absolute certainty is that cannot stop accelerating debt issuance. At some point, the Federal Reserve will backstop that with printed dollars. That too will accelerate. The snake will eat its tail, and all along the way, Bitcoin will be the sponge that absorbs all of that new money, and that best tracks that money creation. So yeah, that's kind of the long-winded way of saying buy Bitcoin.
Stay humble, stack sats. I love it. I love your message. I see you going a long way. Thanks, Joe.
Thank you very much, Paula.